What's up, guys? It's June 12th, 2025. We had a rally in the mornings and then sideways price action for most of the day. I took about 3 trades, finished positive. One was a scratch. I just scalped out for a couple points. One was a win. And the other one, I scalped out. It was it was on NASDAQ, so the price action looks a little different. The 3 trades I took was so the first one I took was 50% of this micro channel, and this was the scratch. I got filled on this bar and I scalped out right here because I thought what happened above the email was gonna happen below the email, and I was long, so I just scalped out, but it ended up working. The second trade was vice versa. I saw that this bear bar made 1R very quickly, so I placed my order here, and when I scalped out on my long, I reversed short and I was filled instantly. Couldn't get filled all the way up. I did take one loser actually. This was the loser. Very small risk. I didn't bet too much. Wait, that's so weird. Where's 1R? Wait, my numbers are messed up here. Okay, there's 1R. Yeah, because that looked like a win. I was like, wait a minute. So 1R, let me make this a little easier for everyone. Make that red. No. Okay. I don't even know what I'm doing. Okay. So, you know what? How about this? There we go. This is the 50% level. If when I trade micro channels, sometimes I go for 2R. So I went for 1R here, got filled on this bar, never reached 1R, stopped out. I saw the bear channel down, so I wanted to get filled. I had my stop right above here. Let's go like, oh, okay. My fib levels are messed up. I gotta fix them after this. Let me turn this back on, turn this one off, turn that one off. This. Yeah, I've done something wrong with my fibs. Okay, anyways. I was going for 1R of this here to here. Oh, excuse me. This was the bear channel, so I got filled on the 50% level. My stop was above here, and I never got stopped out, so I ended up just scalping out right around here for a small profit because I scaled in around this bar. So a small day, not too much action. Hope you guys did better than me. It was definitely a scalpable market, and my fibs are still messed up. Hold on, I saved these. There we go. We're gonna rock with these fibs. Let me just turn off the prices. Okay, there we go. What about? There we go. Keep it simple. This bar makes 1-1. You put your order there, you get filled 1-1. There's a lot of trades. Trades definitely work better on the bulls side. So here, this is a bear bar that the bulls get 1-1 very quickly. It comes back. You can make another scalp there. Let's see if this bear bar. Yeah, this bear bar gets 1-1, so you can after the 1-1, you put a limit order. Actually, you get stopped out on that one. Okay, that's also 3 pushes up. Push 1, pull back, push 2, pull back, push 3. So that's a third leg, and we get stopped out. Trading range behavior. Want to give a quick shout out to the members and subscribers. I appreciate you guys tuning in. Always talking in the Discord. You guys know I love your support, so thank you for that. Weekly chart, daily chart. Weekly chart's still showing a bull bar, but it's not as big as the prior week. Okay, I've got to fix these fibs. It's driving me crazy. I'll do it after this video. So what I'm measuring is the last week's bar is this big from here to here. We just measure that up, and we're barely past last week's bar. Tomorrow's the last day of the week, so it'll be interesting to see what happens. Do we just get another range day? Market cycle says breakout channel chain range. From just this 5-minute perspective, we get the breakout, we get the pullback, so we're channeling higher. We got the trading range. Maybe the overnight session, maybe tomorrow's session, we break out of this trading range, go up or down. Okay, this is gonna drive me crazy. We're just gonna fix this now. There we go. All right, so there it is. Breakout bulls break out, they get 1-1. Bears break out, they get 1-1. I was more bearish. I thought we'd sell off because of this leg down trading range. That's why I was short up here. On ES, I would have got stopped out, it looks like, but NASDAQ, again, it never tagged me. So we'll see what happens. Market cycle reset's coming. Maybe it comes next week. We don't really know. So count the same legs every day. Bears have 3 legs down. Leg 1, pull back leg 2, pull back leg 3. This is the weekly bar, so there's a hidden bear leg and a rally. Leg 1, pull back leg 2, pull back leg 3. This leg up had enough momentum for bulls to keep going. And now look at the legs. Leg 1, pull back leg 2, pull back leg 3. And leg 3 is getting bad follow through. We're approaching the breakdown point. Let me get a... I didn't know we already hit the breakdown point. That's interesting. If I was trading options right now, I would definitely start a swing position for the bears. And I would target 2 to 1, 1 to 1 with a stop up there. And I'm definitely looking to trade options later this year, but right now I just want to get my futures accounts on automatic. So let's do this breakdown. It's going to be a not too long one today. Sideways price action. Gap down. Bar 1 is a bear bar. We do see a rally in here. Rally, sells off. Leg 1, pull back leg 2. Right into the support of yesterday. Second leg trap. Bar 2 sells off by a tick, so we know bears are trapped, and then rallies again. I'm gonna try and focus all these breakdowns going forward about trap traders, because that's how we can place trades. It goes context and then entry. So bears are trapped because we see a tail on 2. Rallies, they're going to be forced to buy back shorts, or they can short the EMA. So let's do the math. Bears get short below bar 1. Bears get short around the EMA. They get short around the bar 5 high. They get out for break even. This is my 50% pullback, why I like to trade it, because it lines up with trap traders, it lines up with breakouts, it lines up with second legs. So bears sell here, they're trapped. Bears sell more here. Their new price is the 50% level here. Comes off, it goes a tick past, so they barely make a point. Quick bears will make a small tick, paying for their commissions, and then they buy back shorts. Same time bears are buying back shorts. Bulls understand this dynamic, and they're buying 50% level pullback, hoping for a leg up. They get that leg up. Bar 7 rallies but closes below the EMA. Bar 8, we have a breakout bar. We have a bar breaking out above the EMA with a gap. Good place for a gap. Trapping bears at resistance. Bar 9, follow through, creates another gap. Now we have 2 gaps, so that's signs of a trending market. Bar 11, follow through, and another gap with bar 10, follow through, and another gap with bar 11. We now have 3 gaps, so we know bears are getting trapped. Let's line this up. You have a gap here, gap of that swing. In order bears are trapped. Line up the next one. In order bears are trapped. Line up the next one. Look, right around resistance. All 3 gaps happening around resistance. So we know limit order bears are getting trapped. They're going to try and buy back shorts. They could, in this situation, they could short higher. So it was a range day. I mean, we put our entry right around here. See, put our entry there. 50%, they short higher, 50% is hit. Put our entry there. They short higher, 50% is hit. And then they short here right around that resistance, and then short higher, 50%. The last set of bears that shorted right here got back to the original entry, so they made money on their second leg. What's important to understand is all types of bears are buying back shorts. This would have been a nice trade to be a part of. The low of 6 to the high of 19, 50% pullback, rallies. You're going to have to sit through some sideways price action, but you get filled in 49. That wouldn't have worked on NASDAQ, but the context is there. Trap bears, sell more, sell here, sell more. These bears are trapped, these bears are trapped, these bears are trapped, these bears are trapped. They sell higher, 50%, rallies. The only drawdown you're going to see is 23 and 24. A couple points on 28 and 29, but that's okay. That's not a bad trade at all. This is why I like talking about trap traders now, because they fall in line with the type of trades I'm taking, and it just adds the extra layer of context that I think is important for us, because it goes context and then entries. Always context and then entries. So we have a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bar bull microchannel. 17, 18 first pullbacks, and then you see a big bar 19 becoming climactic. Leg 1, pullback leg 2, pullback leg 3. When I took this trade, I acknowledged we were in the third leg, but I also thought that there was enough energy to go back to my target. I traded it small, so it wasn't the worst hit. Bad follow through 20. We're in the third leg with bad follow through, so this is a form of a wedge. There's a wedge. There's a wedge. 3 pushes in one direction. 21, it's a doji bar, but it has a tail, so bears were shorting the high of, or the low of 20. 22, bear bar closing out slow, fall through 23. I think leg 1, pull back leg 2, shock to get second leg down, which is why I took the trade. 50% level, retest, and then a bounce is what I was looking for, but I ended up getting trapped. Trading range day saved me. I shorted around here, shorted a little bit more. I just popped out for a few points. Got saved in that direction. Now the fun begins. That was all the movement today. Now we go sideways, which there are still plenty of trades to take. That's why I been transitioning into limit order trading this year. It's just it suits second leg. Well, you can every setup has a way to enter with the market or with the limit order. It's just whatever suits your personality. Leg 1, pull back. Leg 2, pull back. Leg 3. These leg 2s and leg 3s, it never goes past 23. So the way I define it is, it got a second leg, got third leg, but it failed. My target, for a second leg to pass, it'd be a tick below the swing. Leg 1, pull back. Leg 2, pull back. Leg 3. Never goes below 23 again. Bar 29, 30, rallies, gets a pullback. So we have a rally here, pullback, 31, the second leg, 32, 33. 33 is testing the low of 20. I do like that short for a breakout point. So here's the breakout point right here. You get filled and you make your 1R on 34, 35. Right around there. So you get filled on this green line, you get filled on 33, and within 1 to 2 bars, you're already out of the trade. That's a good scalp I would have liked to participate in, but I was trapped short. 36, big bull bar closing on its high, showing off to get second leg. Problem is 37 breaks the low of 36. So if you buy anywhere in between, put a stop below, you're going to get stopped out, and then you're going to get that second leg, 39, 38. 39, bad follow through, form of a wedge. Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4. Very messy. This 36, you don't really have to count it because it doesn't make a new high. So here's a swing, and then 31 makes a high. So leg 1, pull back. 33 makes a high, pull back. Leg 1, pull back. Leg 2, pull back. This pullback is complex. It's two-legged for the bears. Wedge bottom into support, and then it rallies 38. There's that wedge top. I didn't in the second go around, I didn't count 36 because it didn't make a new high, but 36 is definitely a bull leg. 3 to 4 legs higher. Then we get 3 to 4 legs down. We get leg 1, pull back. Leg 2. The leg 2 is hidden in the tail of 43 and 44. Then we get another rally. This entire channel up was shot off to get its own second leg. So leg 1, pull back. Leg 2. And you can see how this bar 49 goes past here. So I would say that's a passable second leg. You could also argue leg 1, pull back. Leg 2, pull back. Leg 3. Tough day to count legs. But nonetheless, this rally had enough momentum to get a second leg as well. And we see that with 50. Then we get bad follow through for the rest of the day for the bulls. It's kind of just more neutral price action. EMAs are going parallel. So that's a sign of sideways price action as well. Bad follow through 50. 51 is a bull bar. So the bulls could get trapped thinking this is a leg 1, pull back. Leg 2. Instead, it's just a pause bar for this channel down. 53, another bull bar, but doesn't break the 52 high. So there's a trend line right around here. Wait a minute. Yeah, so none of these highs are being broken. So there's a bear trend line here. Then 56 breaks the trend line, and then we get that leg 2. So leg 1, trend line break. Leg 2 all the way there. Then we get a trend line break, 62. Small third leg down, 63. Then we get a rally, 64, 65, 66, 67, 68. Lots of overlap. There's lots of overlap. Look at this. Bulls are not really buying the close. They're buying the pullback, rally. Buy the pullback, rally. Buy the pullback, rally. Buy the pullback, rally. 69 is bad for the bull case. We're at the trailing range high. Then it's a bear bar closing on its low after a lot of overlap. And then we see bar 70. It looks like a good breakout bar, but it's late in the day. It's late in the trend. If you want to call this a trend, it's a late bar. So you could say, how can we count this? Leg 1, pull back. Leg 2, pull back. Leg 3. Wedge top that sells off. 70, 71 closing on its low. Bad follow through 72 has a tail, but then it does get follow through 73, 74, and then 75. Bear bar closing on its low with follow through 76, and then a big rally closing the day 77, 78. It's a really tough day. Limit order traders did better. All gaps get closed. There's a bear gap here, gets closed. That's one way to tell what type of day we're having. If gaps stay open, trending behavior, gaps close, it's trading range behavior. Bull gap here, that gets closed on the way up. So this gap gets closed there. This gap gets closed there. There's a gap right there. Again, I'm working on a gap indicator with a white paper, and I'm just going to create a little package that's going to be pretty cool to look at. I want to check out the first bar of the day. It's the overnight session, so you know I like to trade the overnight session. Bear bar. This is something I would like to take. I have to see if there's follow through. I'll probably short the 50% level of the bar 1, bar 2. So let's say this closes down here. Right now it's hard to say if this was a vacuum or a breakout bar because of the way it's closing. So let's say this bar closes down here, then I'll extend that and I'll look for a short back to the extreme. Hope you guys had a good one. I just started Randy Howe's psychology class again. Looking forward to that, and then I have some more things between content and studying going on later this year. Hope you guys had a good one. Let me know how you guys did. Tough day, end of the day. I'll talk to you guys tomorrow. It's Friday. Let's be smart. We're more than halfway done with the year, so let's finish strong. If you learned something, share the show. Don't be a hoe. Have a good night, everyone. Thank you for your time. Bye.